about 40% of the business comes from Israel, and that's audited by EY. And what the auditor is saying is not saying that, he's just saying he didn't edit it, he didn't audit it. It was not done by the local consolidating auditor. Obviously, the information comes from our auditors from across the world. You have to understand this is a multinational company. It is not only India only business. Only about 700-800 crores of business is booked into our Indian, Indian business. Rest of it comes through various entities that we have, either brought in through acquisitions or through organic growth, and they are audited locally by their local auditors. And so once that audit information comes through, we pass it on to our auditors, and that's what they are talking about. So in fact, we have revealed, we have gone through EY auditing all these firms when we made these acquisitions. If you go back and look, and it's perfectly clean and kosher.
It is big, bold statements like this one made by the then Brightcom chairman and MD P. Suresh Reddy that may have lured investors to bet big on the company he called a digital marketing solutions and services provider. The numbers are there to see. In March of 2021, when the Brightcom Group shares traded at 5 rupees a piece, it had a total of 63,300 retail or small shareholders. It had those with authorized share capital of less than 2 lakh rupees. This is data from the BSE. Within 9 months, by the end of the year, the stock had made a peak at 122. This is adjusted for the bonus shares. By then, the number of retail shareholders in the company had tripled to over 2 lakh. Then the stock began to drop, one lower circuit after another. The stock mostly traded in the binary, either a lower circuit or an upper circuit. There was a period in June of 2022 when the stock had 13 consecutive lower circuits. But investors did not lose hope. They continued to pile into every opportunity they could get to enter into the stock, trying to capitalize on the narrative set and the fact that big market participants like Shankar Sharma had invested in the company.
If you're looking at last year, that was some of the investors who came in 2010. If you just look at December, it has gone from almost 2.5% new institutional funds have come into the company. And now we have FPIs investing in the company. That is a show of confidence. We had a large known investor who's come into the company because he feels the fundamentals are right.
Come March of 2024, the Brightcom Group had a total of nearly 6.6 lakh small shareholders. That is 10x from 2021. Today, they are all left in the lurch. Trading in the Brightcom Group has been suspended from Friday, the 14th of June. The NSE had made this announcement last month itself, saying that this was going to happen, but the company had immediately issued a clarification saying that they are working towards releasing their Q2 and Q3 results of FY24 and are confident of doing so by the 11th of June and subsequently avoid this suspension. Now, come the 11th of June, the Brightcom Group did declare its results, but only for Q2 and for the first half of FY24. There was no clarity on when the Q3 numbers will be declared, and hence this suspension. The entire saga of the Brightcom Group goes back to 2019-20 and 2020-21, when the Brightcom Group issued warrants or shares on a preferential basis on 4 occasions and raised nearly 870 crore rupees from 82 investors. After market regulator SEBI found serious corporate governance violations and accounting malpractices, it ordered a forensic probe against the company. The Enforcement Directorate got involved and said that Brightcom itself financed its preferential issue by round-tripping funds through its subsidiaries and other entities. It alleged that over 300 crore rupees advanced as loans to Brightcom subsidiaries were partly siphoned off and remain unaccounted for. In August of last year, Chairman and MD Suresh Reddy and CFO Narayana Raju resigned after SEBI barred them from continuing in their positions till further notice. They were also barred from participating in the capital markets. In February of this year, SEBI refused to lift these restrictions. Both Reddy and Raju were also banned from holding any key managerial position in any listed company or its subsidiary until further notice. However, the market regulator did give Shankar Sharma some relief by lifting the ban on him selling his stake in the company. So now who owns what of the Brightcom Group? As of March of this year, promoters still own 18.38% stake in the company. 2 funds of the Vanguard Group cumulatively own 2.2%. The LGOF Global Opportunities Fund holds 2.5%. Shankar Sharma still has a 1.14% stake, while retail, the biggest of them all, has 41.7%. So what next for Brightcom? As the stock is suspended for trading, it will remain so for the next 15 days. Post this, trading will resume in the trade for trade segment under the Z category. Now, stocks in such categories are only allowed to trade on the first trading day of the week for the next 6 months. Under the trade for trade category, only delivery based trading can be done and intraday trading is not allowed. So that is the Brightcom Group and the saga that has unfolded. Over a 3-year period, the stock from a multi-bagger has just turned into a perfect case study for investor awareness. We at CNBC TV 18 will keep you abreast of all the latest developments that take place here.
Hey, thank you for watching this on CNBC TV 18. Hope you liked it. For more such interesting news and updates, follow CNBC TV 18 on all the social media platforms.